Hi, how are you guys? I hope you're feeling better than me. I haven't actually been doing much speaking, and many of you have been to the courses I've run know that I like to do a lot of speaking. So it's actually been really hard for me, but I've been trying to save my voice. And Jamie's been doing an awesome job, hasn't he? So put your hands together for Jamie and Joel and all the other speakers. Normally when I'm here, I'm sort of speaking for close to, I think it's 7 days, 14-hour days. So it's actually been rather pleasant to sort of hang back a bit on this. So I've been really happy about that. Guys, I'm here to talk to you about wholesale land. And who already has actually got some of the wholesale land from us already? Quite a few of you? Okay, all right. Some of you don't even know what I'm talking about yet, but this is an incredibly good complementary strategy to what you're looking at doing here in the US. And, you know, what the Academy is all about is putting together and finding some incredible opportunities to help you decide and then educate you to decide what's right for you. It's about giving you a smorgasbord of, say, good quality things like organic food, and you decide what your tastes are and how much of, or how little of anything that you want. So I'm going to go through this in a moment. Am I still okay? And what I'll be doing is I'll also be giving you a bit of a market update on Australia, and I'll be telling you why land specifically, because most people have a perception about land, and the way that they've always been taught to do land is not really the best, most optimal way. Would you agree with that? I remember when I was back in Malaysia a while ago, and this is to illustrate to you how you can do things better in life. I was there and it was around the time of the bird flu scare, and I walked into the toilets after I arrived on the plane, and I just like to read signs because I always feel there's something you could learn, and that's one of my primary questions. What else could I learn? How can I do things better? And I saw on the wall there was a sign there, and it showed the 10 steps of how to wash your hands properly. Now, I'm like, I've been around for a while, and I actually thought, up until this point in my life, I actually knew how to wash my hands. But obviously I didn't. I didn't know that there's actually a medical way that doctors and nurses actually get taught the right way to wash your hands to make sure they're absolutely clean and there's no disease, etc. And I actually went through the whole thing. It took 5 minutes, and I'll probably never do it again like that, but at least I went through the process once. And this is what I want you to think about. In terms of the way that you do land or the way you perceive land, when I first started investing, I never bothered looking at land. And there was a really good reason for that, is because I had all these negative associations with land, right? But what if there was a different way to do land? What if there was another way to do land, completely differently from the way you've actually been educated and the banks and the media have led you to believe? And that's one of the things that Jamie put together as a mandate for us at Property Direct, to do land in a different way, to give people who really want to invest in the Australian market a different entry point. And then not only that, give them a way to do it in a way they've never seen, or even if they've seen, have never been able to get access to in the past. And that's what our wholesale land opportunity is all about. Imagine this. Imagine if you could, actually I'll ask a better question first. What's the main reason do you think Australians buy Australian property for? What's the main reason? Okay, as investors, you're right. As an investor, not as an owner-occupier, what do you think the main reason is that Australians, or even Kiwis, want to buy property? Capital growth. Capital growth. Who would agree with that it's capital growth? It's probably the number one reason, okay? But we all believe that to get capital growth, we've got all these costs. We've got to pay in Australia, not New Zealand, but we've got to pay stamp duty. We've then got to take out a loan. And if you don't have great credit, you may struggle with that, or you pay higher rates. You've got to pay land tax. You've got to pay rates. You've got to pay maintenance. You may have to pay body corporate. Would you agree with that? And that's a whole lot of cash burden, and that causes you stress for at least the first 2, sometimes 3, even up to the first 5 years, depending where interest rates are on a property, right? And that causes major stress for people because they can't afford to lose their job, they can't afford to do anything else because they're under the burden, the heavy burden of negative gearing. Who understands that? And that's often the main reason people struggle to buy a property, and even if they get one, they might get up to 1 or 2, but then they run out of what banks call DSR. Banks, whenever they actually lend you money, do 2 tests on you. One is LVR, the other is DSR. LVR is loan to value ratio. They want to make sure that you put some hurt money into the deal, or deposit is the correct term, okay? Secondly, they want to know, how are you going to service this debt? And what they do is they actually do a formula that is very, very much in their favour. They stress test you, but with figures that massively advantage them and massively disadvantage you. That's what banks do. How do I know that? Because I've actually not just set up and run a bank, I've actually owned a bank. So I actually know exactly how the formulas work. And that's the model that you've got in front of you in Australia to take advantage of the property market. So what we wanted to do was have a whole different way of doing it. What if you could actually enter that market with a fraction of the money that you expected to? So what is an average property in Australia? An average property in Australia is going to cost you how much? Well, depending which market, anywhere from about 550 to 600,000, something like that. Let's just say it was, for simplicity, 600,000. You would have to come up with 20% for hurt money and 5% for the government. How much is that? What's 25% of 600? $150,000. Who would agree that that would take a long, long time to save up? If you grossed it up into maybe pre-tax, it's maybe closer to $300,000. Think about the last time you were able to save $300,000 or earn $300,000. That would take you a lifetime. Who agrees with that? So we wanted a way that, what if you get in for a fraction of that? And what if you could get in, not even have to go to the bank? Who would think that would be extraordinary? Or have to pay anything like mortgage insurance, land taxes, stamp duties initially, body corporates, or rates. And you're able to hold an asset in a high growth area for not one, but potentially up to 2 property cycles. Imagine getting all the growth, capturing all the same growth as the person next to you, but the person next to you has all these costs going out, eroding their profit, and you don't. Who thinks that sounds like a maximised way of getting into the property market? Because that's what we've put together here. Because that's what we think is really important. And I'm going to explain to you why we think it's incredibly complementary to this market. Because here in the US market, would you agree that many of these properties are not going to grow for a while? In fact, if you're buying them for necessarily capital growth, maybe not the smartest thing. Who believes capital growth here will definitely happen? I have no doubt about it. But I don't think it's going to happen tomorrow or the year after. I think, and this is what my sort of belief is, over the next 5 years or so, probably the next 3 to 5 years, you'll get 50% of growth back to its original cost. Why? Because of replacement costs. I believe in the next 10 years or so, they'll go back to doubling again here in places like Phoenix. I don't have any greater expectations. People have said to me, oh, that's too conservative. But you know what? This is what I believe. The blue sky always looks after itself. I'd rather focus on the worst case or close to the worst case that I can assume and then see if it works for me. If that works for me, I know with certainty the blue sky will work for me. Who agrees with that? All right? And that's the perspective I've come from. So here it's all about cash flow and longer term. So the cash flow today and the capital growth way off in the future. Who understands that? The wholesale land is all about the capital growth now and the cash flow way off in the future. Can you see that putting them together gives you a very complementary outcome? Who understands that? All right? So this is why we've done this particular way. So let me just, oops, hang on. Let me just, okay, here we go. So, and by the way, if my voice fades at any moment, I do apologise, but we'll see how we go. I'll just do the standard disclaimer. While every care has been taken to ensure the accuracy of the material presented, Property Direct, its employees, presenters, or any of its representatives will not bear any responsibility or liability for action taken by any person on the basis of the information contained in this seminar. The content is for information purposes only. It is recommended that no person make an investment decision until such time as their individual needs, desires, risk profile have been assessed by a qualified professional. We're basically here to give you lots of information. The process after this, someone will ring you and talk to you and then be able to talk to you more specifically about your situation. I don't know every one of your situations personally. I can't be giving advice. Whatever I say to you is from an information purposes only. It's not directed to be seen as giving you specific advice. Who understands that? Please say yes. Yes. Thank you very much. Okay, a bit about my background. I won't go into too much detail, but because some of you have already heard some of the presentations I've done in the past. Basically, I come from a non-English speaking background. We probably had the worst belief structure around money embedded into us because I come from a communist background in Europe. I come from a farming background and I'm a very strictly Roman Catholic family. So for us, all the money, well, if you have money, you must be evil. And if you want to own lots of stuff, well, that's got to belong to the government. And if you belong to the church, well, you should be just giving the money to them. So that's the belief structure I grew up with. So, and I was always taught to be a good worker. In fact, my parents taught me that because that's all they knew. I believe that in life, we always do the best we can with whatever resources we have. Who agrees with that? And this is why I want to acknowledge you guys, because you've come a long way. You've come so far from another country to improve your resources. And have there been substantially good resources that you've actually been able to take in during this week-long program? Yes or no? Yes. All right? And I want you to understand that I've been on the previous 3, and my goal's always been to make sure that the content serves you well, and that's why we've been able to have this more and more efficient. And Jamie actually really wanted a whole day off. If it was up to me, you wouldn't have had a whole day off, trust me, because I like to give people lots and lots of content. I'm very content heavy, and I suppose that's just the way I am, because I'm one of those very analytical people. But I like to give a lot of information. Some of you have already got enough information. Some of you got enough information when I actually ran the one-day events in Australia. Who came to the one-day events in Australia? Right? Many of you at that probably had enough info to be 80% of the way there. Would you agree with that? Yeah. Some of you. All right. So for me, it's all about how do you get the result you wanted to. My parents said work really hard. I actually thought there's got to be a better way. I'd rather have, instead of my body working hard, I'd rather have assets working hard. Is that a good way of going? Yes. Why? Because it's scalable. It gives you the time to enjoy what you want to do. And in fact, I made some mistakes in my investment career, which started quite a while ago. I actually went to a place called Brisbane and the Gold Coast. Some of you know this story. I went up there and I actually did what was called 2-tier marketing. Who understands that? There was a price for locals and there was a price for foreigners. And the foreigners were people from Sydney and Melbourne and now Perth and Auckland as well, in that sort of term. So for me, it's always been important to understand, is it a competitive price? And here it's very easy. Why? Because if you know it's well below physical replacement cost, and you're in a growing area with white-collar workers who don't, unlike somewhere like Nevada, get paid a very small wage and rely on tips, here you've got a lot of white-collar workers and they get paid higher base salaries, they don't rely on tips. As a banker, I know what that means. That means those people are more eligible to borrow money more easily and more of it. Who understands that? And if people can get more money, they can get it faster. What will they spend it on, do you think? Housing. And they'll keep pushing that housing price up. As an investor, is that a good thing, yes or no? It's a very good thing. And that's one of the key things that I look for, is the type of demographic split in terms of employment. That's very, very important to me. So anyway, I made those mistakes on the Gold Coast because I also understood that the Gold Coast is a bit like Las Vegas. Yes, they're on a higher base, but it's to do a lot more with tourism and it has a lot more to do with conventions, etc. as well. It doesn't have as much manufacturing, it doesn't have as many white collar, and that's why I'm not as favourable on places like Nevada. I'm much more favourable on places like this because of that. But what you've got to do is, with that knowledge you gain, you've got to put together a team, your master team, your professional team that's going to help you get the results you want. You put together a system, and then the most important word there is you've got to take action with it. Now, that action could be a yes or it could be a no. Either way, it doesn't matter. You've gotten a result. And I know Dean and Liz have gotten an extra result here. In fact, out of the 4 events that I've run, no one's ever got that result of going away and getting married. So well done to you guys. That's awesome. So I'm going to add that to my list in Australia of all the possible results you can get. I'm going to use you guys as a reference. But when you take action in life, you've put yourself on a different path to everyone else, particularly the friends and family around you. Now, remember I said it's either a yes or no, because some of you will take some action, buy some properties on this tour. Some of you will say, look, some of those didn't meet my criteria, but I know what I want. I'm clearer now. You see, every time you say a no, it leads you closer to the yes. And most people don't understand that. So I have no fear of saying no. It just gets me clearer on what specifically I want. And I've learnt this over the years in Australia when I've dealt with real estate agents. When you hand a real estate agent your card and on the back of it you write specifically what you want, guess what? That agent loves you because they're sick of people who can't make up their mind because they don't know what they want. But if you specifically said you want this property, this age group, this price point, this location, this many bedrooms, bathrooms, etc., they go, great, I know exactly what you want. They keep you in the top drawer. And they can find stock for you like that. And if you've shown them that you can actually settle a property quickly, you're their best friend. You're their new best friend. So you've got to then take action. What I did was I put together some advanced strategies with property. In the first 3 years of using that, I took out over 40 properties, settling 26 of them. I've then gone on to do commercial property. I've done IPO stuff, I've done franchising, I've done so many other things. And for those of you just starting here, you don't know what new doors will start to open that, by the way, have always been there, but you've just never seen them. You've never had that as part of your filter to look at. You might find that you get involved with commercial property here, or you might find that you want to apply for a green card. Who knows what the future holds for you? And that's pretty exciting. Who would agree with that, right? And I know some of you, the exciting thing is that you want to use the best of both tax systems to get you the most results. Some of you may actually even want to do things such as, the Australian tax system only allows you a tax deduction to go visit a property, right? You visit at least once a year, but the Australian Tax Office does not say what quality of flight that you're allowed to purchase. It doesn't say what quality of hotel or what quality of food that you have to spend. Who understands the significance of that? Because what does that mean? Every year you get I won't call it a holiday, I'll call it an inspection of your property that you come to the US each year. Right? Maybe you fly first class or business class or whatever you want. Maybe you stay in some of the really nice hotels and you go out to dinner while you're here, right? And all of it's tax deductible. Who thinks that's kind of a nice bonus? Now, it's obviously never the reason you buy a property, obviously. But if there's opportunities like that as a bonus, you could either choose to fly, economy and stay at a 2-star motel. You could choose to do that. But you know what? If it's tax deductible, you may choose the latter. It's up to you. But in the US but if you went to find a new property, maybe in Tuscany, the Australian tax system wouldn't allow you to deduct that necessarily, would it? But under the US system, because you're running your LLC and your LLC has sent you to investigate a new potential area, they have a different method of assessing. So who understands that by opening accounts here, getting yourself started on the process, that you've actually started opening up some doors for some incredible opportunities into the future? Who understands that? Who really gets that? And to me, that's one of the reasons I got started and involved with this. Some of you know that I've actually set up a bank as well and own that just like a franchise bank, and I keep studying and I teach a lot of the stuff that I actually use. Okay, so this is what I found in life. Some people watch things happen, some people make things happen, and some people just wonder what happened. All right, who knows people like that? You see, I actually believe we're all here for pretty much the same sort of reason. We're all at a certain point. We want to get to a different point. And that could be bigger, brighter, shinier, easier. Who knows? But it gives you more opportunities, more security, more of what you want. That's what it gives you. And some people seem to dash along really fast. Seemingly, they get there with ease. Other people meander a bit, but eventually get there. And some people are just so caught up in not being able to make decisions and procrastinate, they just go round and round and round in circles. Who knows people like that? Who knows them really well? We all have a part of each of three of these within us. All three of these. All right? Now, it's your decision. It's not mine, it's no one else, it's not the person next to you, which path you choose to take. But I'll warn you on one thing. Most people look at these two that achieve the goal, they're okay, you both get there, correct? It's the same, right? Or is it? If you had $1 million when you were 21 versus $1 million when you were 71, would there be a difference, yes or no? Yes. Significant difference. So the result is different depending on how old you are. Because when you're 21, you've got a lot more time to make use of that money and time. Would you agree with that? All right? So I just encourage you, whatever your decision is, whether it's a yes or a no, do it with urgency. You all understand this is important for your financial future, but do it with urgency. Because every no gets you closer to your yes anyway. Just do it with urgency. You don't know how long you've got. We all know why we're here. Why are you here specifically? I'm sure you've done some of this with Jamie already. And what are you looking for? Well, we've already moved past that, but no doubt you're all here to make profit out of property. Now, some of the key things you could do here, and that's pretty exciting, is that not only can you buy properties for long-term buy and hold, but you can also do property trading, you can do rent-to-owns, lease options. There's many different things, and that's why I wanted to point out to you, once you get started, you don't know what doors that'll start opening. Things that are possible here in the US are not as commonly done or as easily done in Australia and New Zealand. just by starting that process, new ideas will come in that you haven't heard of because they're not common or not even possible in Australia. You know, you heard Tyler the other day say that sometimes they flip properties, and he goes, we can flip or exchange properties for as little as $60. Now, imagine if you were in Australia and you tried to flip or on-sell a property. It's less in New Zealand because of the lack of stamp duty, but imagine if you tried to flip or sell a property in Australia. Would it cost you significantly more than $60? Right? It's just incredible. Now, obviously, it has other on-costs, such as holding costs, etc., but sometimes they only hold them for a fraction of a second. So I want you to understand the possibilities here. They're quite incredible. Now, we've talked about why properties grow, and these are some of the main things that I like to talk about. All right, supply versus demand drivers. You know, maybe I'm a bit of a geek. I probably am, because I'm a science and technology and sort of geek. I like to get into the detail. Who else here really likes to get into the detail, the nuts and bolts? Right, that's always been me. I've always wanted to take things apart. In fact, every Christmas when I used to get something, by Boxing Day it was in a million pieces. You know, by the following day it was put back together again, because I always wanted to know how things work. And the same goes for property. I want to understand the supply and demand drivers. In fact, I track over 30 different supply and demand drivers, right? And I've met people like Harry Dent. Who's heard of Harry Dent? Okay, get his book, The Roaring 2000s. And Harry Dent, I had lunch with him up on Camelback Mountain. There's a resort up there. And I spoke to him, and Harry actually is an amazing guy. Just so that you know, Harry Dent, he actually thinks that long-term places like Australia actually have a very, very good result or outcome of where they're headed. Why? Because we've got so much migration coming to Australia. Do you know there's many other places in the world that people are leaving? They're deserting, places like Ireland. But where are they coming to? Australia. Why? Because they can see that we have such a strong long-term economic story. We have a lot of commodities that the rest of the world desperately wants and needs. We have coal, we have uranium, we have LNG, we have so many other sorts of things, particularly iron ore. And this is what the rest of the world needs. Now, I'm going to preface some of the things I say with relation to supply and demand. Another aspect I'd like you to think about is this: appreciate versus depreciate. So in terms of the property market, understand this. What do properties generally do in the Australian landscape? Do they go up in value, or do they actually go down in real value? They actually go down. It's called depreciation. And the tax office recognises it. They're willing to give you a tax deduction for it. Who understands that? All right? They do it here as well, but the physical property sits on some physical land. Doesn't matter if it's high story, it still sits on some physical land. Agreed? What does the land actually do? It appreciates. And it's the general ratio between the house to the land that determines how fast it grows in Australia. Now, some of you will think, well, hang on, Australia is about 80% of the continental US landmass in terms of size. And you probably know here, land doesn't grow very fast. It's completely different to that in Australia. Why do you think that is? Why does land not grow very fast here, yet land grows exceptionally fast in Australia? Everyone wants to live in a certain spot. Think about this. How many big cities do we have in Australia? 3. I don't want to go there. 3, 4, 5. Probably, I'd probably say 5. We have 5 decent-sized cities. The rest are like, anyone from Canberra before I go any further? Yeah. Okay, love Canberra. No, we don't. Look, Canberra's lovely, but if you had a choice, would you want to live in Canberra? If you wanted to go skiing, absolutely. Or if you wanted to work for a government department or military or something and earn good income, absolutely. But would you agree that most Australians like to live close to the coast? In fact, if you look at our whole population, the vast majority live where? Just around the edges. Agreed? The vast majority of our population live around the edges. In the US, is that where their population lives? No. Why? Because they have water and other sorts of things in the middle of their country that we really don't. So that's one of the reasons that Australian land grows so much faster, because we are grouped in very few cities. They have a lot more states, and just because of that, they've got many more state capitals. And because they've got many more state capitals, people are drawn to it automatically, just like they're drawn to Canberra. Does that make sense? So most of our people are around the edges. Now, in our major capital cities, the Sydney, Melbourne, Brisbane, Perth and Adelaide, is there a lot of spare land? Yes or no? Think about them. In the city, is there a lot of spare land? Not at all, right? In fact, while you were driving around on the bus here in Phoenix, who saw within the city of Phoenix, and mind you, it has got a huge area, who saw lots of areas, empty pockets within the city boundaries? Now, mind you, their city boundaries are 10 times bigger than a Sydney, Melbourne, Brisbane or Perth, but they've got a lot of spare land here, right? It's not like any other city in the US either. And this is why the land here just hasn't grown as fast. If you went to somewhere like New York, do you think land in New York would grow fast? You bet. Same thing in Chicago, right? And Phoenix isn't that far behind Chicago, but the land values there are higher and they grow faster simply because the population density is much higher. It just so happens that here they've got incredibly good infrastructure. And by the way, when we were driving around, did you notice that we covered a lot of ground? And the only reason we got caught in a traffic jam was why? They were rubberising the road surface. But all the other ones that I've run here, there's been no jams. So I've only been, all the time I've been in one traffic jam because of an accident on the freeway. That was it. And for a city this size, who thinks that's incredible? You could be in a Sydney or Melbourne in one of the back streets, and often I visit my parents in Sydney, my dad and my sister, sorry, in Sydney, and I'm in Carlingford. Who knows where that is? It's northwest, about 25 k's northwest. I get caught in traffic jams there. It just annoys me. I go to a city that's much bigger and I never get caught in a traffic jam. I just think, what are they doing, particularly New South Wales, in terms of planning? They're just awful. It's not good, right? Not good at all. So this is one of the key differences that you have to understand about the Australian market, is that land not only has growing faster lately, but has been growing faster for a long, long time. And there's a couple of reasons for that we'll go through in a moment. The other point I'd like to make is owning versus controlling. Could you own a piece of America? Could you own a piece of Australia? Absolutely. But if you owned that, and I mean paid it off or had a principal interest loan that paid it off, would the rent be higher than if you just had an interest-only loan? Yes or no? If I had two properties side by side, one had P&I loan, one had interest-only loan, would the gross rent be any different? Yes or no? No. Would one grow faster than the other? Yes or no? No. Any upside, would it matter whether it was P&I or interest only? Yes or no? Would it matter for the growth of the property whether I had interest only or P&I? No. So you see, owning a property is what we're all taught to do because it's safer for the banks. It's safer for the government. Do you know why it's safer for the government? Does anyone know in Singapore, the government has just decreed that instead of the deposit, like in Australia, it's 20% deposit. That's the hurt money. In Singapore, they've just decreed, and all the banks have had to just immediately do this, you don't put down a 20% deposit anymore, it's a 30% deposit. Do you know here in the US, they used to have loans that you put $0 down. You can still get FHA loans, which is a 3% down. Government underwrites them. That'll change over time because the US government has recognised that not everyone needs to or should own their own property. So they should work a bit harder if they really want to own their own property. That's why they're in such a big mess. Who understands that? Okay? So to me, owning is not the best way because it costs too much money to own. I'd rather control with a lot less cash flow and much more of it is tax advantage because it's in pre-tax dollars. Who understands that? So I'd rather get interest-only loans, not repay the principal, it's still going to grow, and that principal that I would have had to pay out of post-tax income, guess what I can do with it? Invest in another property. Isn't that a smarter way to go? So instead of having one property growing for me for the same money, I could have maybe two properties growing for the same money, right? And that's the sort of thing I'd like you to think about as investors, because that goes against the story that banks and governments tell us on a regular basis. Okay, so where is Australia at the moment? Well, at the moment, we're doing well compared to the rest of the world. Some of you would say, oh, we've slipped a bit. Yeah, we have. But compared to the rest of the world, are we doing extraordinarily well? You see, we barely even got a glancing blow from the GFC, the global financial crisis. Barely a glancing blow. Other countries that I speak and teach at throughout India and China and Southeast Asia, let me tell you, particularly in Southeast Asia, like Singapore, they got slammed really hard. Their two biggest industries is banking or finance and shipping. There's a Baltic Dry Index that measures how much shipping is going on around the world, and that dropped about 97%. And if you've ever been, who's ever been to Singapore? You can sit out there and you can see all the ships, particularly if you're flying in, they're just lined up ready to go. And they are one of the most efficient terminals for handling of ships and cargo in the world. And if that drops massively, let me tell you, it affects a lot of people there. So they got slammed doubly hard. I remember being up in Hong Kong, I was watching this video, and there was interviewing a young guy there. And has anyone ever been in Asia to those wet markets where it's like open and, you know, they hose it down to keep it cool? And, you know, there was a guy there, you know, big piece of meat, and he's got a cleaver, he's chopping it into bits, and the traffic is literally 2 meters away, right? And they were interviewing this guy, and they said, you know, they were doing a case study, and this guy had his master's in marketing. And they said, oh, you must, you know, what's your name? You must be really disappointed. He goes, no, chop, chop, I'm happy, chop, chop, chop. They said, how can you possibly be happy? He goes, at least I've got a job. 80% of my other classmates don't have a job, right? So he was really grateful for that. And you see, the people in Asia, they've been through literally 2 GFCs within one lifetime. When the Asian tiger and the crisis happened and the currencies devalued, particularly the Indonesians, got slammed so hard. Now it's happened again with GFC. These people appreciate the need to have independent assets in often different currencies or in different parts of the world that are more stable working for them. Make sense? Yes? Australia, where are we at? Well, the Reserve Bank here has said that they investigated ABARE. Who's heard of ABARE? ABARE is the Australian Bureau of Agriculture and Resource Economics, right? It doesn't get on the front page of the Daily Telegraph or the Herald Sun or the Courier Mail, right? But according to their stats, we have contracted about $133 billion of firm commitments over the next 20 years. Agricultural and resource economics. So that's to do with coal, it's to do with iron ore, it's to do with agriculture. Now, what they don't say on that is there's another $500 billion they're currently in negotiation over the next 20 years. That's only some of our industries. Do we have a whole lot more industries in Australia? Yes. Yeah, like tourism, education, many other sorts of things that draw people from overseas. So if you were looking at the balance sheet of a company and said, well, you've got over the next 20 years $133 billion already locked in, plus all this other stuff, do you think that's pretty healthy? Yes or no? It's incredibly healthy, right? Plus, there's many other things going on. We're considered as being one of the most least corrupt in the entire world. We're considered that our property market's one of the strongest and most transparent in the rest of the world. There are many other things that other people look at very favourably compared to many other countries in the world when they look at Australia. Where are we in terms of the property cycle? Well, this is according to one of the groups in Australia, and this is RP data. RP data would be equivalent of who's from New Zealand? From stats.co.nz. That's the sort of equivalent data, but they're private institution rather than government. Stats is more like Australian Bureau of Statistics, but very similar sorts of data in terms of quality. You can see here, this is all the capital cities. One of the great things about Australia, if you invested in Australia, is that we have internal diversification. Some cities have different drivers than other cities, and therefore they grow at different rates, okay? If you're looking at New Zealand, probably the only place you'd really want to invest is places like Auckland, simply because it's the economic centre of the city. Could you invest in the other smaller ones? Yes, but they don't have as many independent legs that drive them as hard. Does that make sense? All right, so if you had the same money, you could have invested in a Brisbane or you could have invested in a Melbourne. Which one would you have done better at? You'd have had a 600% better return in a Melbourne for the same money than you would have had in a Brisbane. Who thinks that's extraordinary? Just understanding the difference in drivers. But many people say, but hang on, Queensland is a resource state. It should be growing much faster. It does, but not necessarily Brisbane. You see, does anyone understand what the problem is with, who's from Brisbane or Queensland? All right, what's the problem with Brisbane? What's the problem with Queensland? What's the problem with Queensland?
Floods.
It's the weather. Hang on, listen to me. It's the weather. So weather's actually the daily occurrence. It's the climate, which is the annual occurrence. But many people would say, but hang on, the climate in Queensland's really, really good. I go, exactly, that's your problem. People go, what are you talking about? And you have to understand that Queensland and Tasmania are different to every other state in Australia. Now, be nice. Does anyone know why they're different to every other state in Australia? Why are Queenslanders and Tasmanians just different? Be nice. They're the best. Oh, come on. Okay, they are the only two states in Australia where the majority of the state's population lives outside of the state capital. Now, why is that significant? I'll tell you why it's significant. Because first of all, if you look at the top 100 companies on the ASX, where are they physically located? Top 100 companies are located in Sydney, Melbourne, correct? And in New Zealand, the top companies there that are listed are usually located somewhere, their headquarters are usually in Auckland, right? So in Australia, they're not necessarily, you might have one or two in Brisbane, one or two in Perth, one or two in Adelaide, but that's about it. The vast majority is Sydney, Melbourne. Excuse me. You're also going to find that the large corporates that move to Australia that want to set up a headquarters, where are they going to set up headquarters? Sydney, Melbourne. No, not Canberra. Sydney and Melbourne, okay? When parents want to send their children to natural English-speaking countries to be educated out of Asia, where do they send them to? The top three in the world, London, New York, and guess where else? Melbourne. But I think Auckland's probably about 4 or 5 because it's considered incredibly good value, right? I actually did a tour through India, was sponsored by the New Zealand government, and I had Sir Richard Hadley with us, who's a cricketing legend, and we had people that were there for immigration, people for education, many other things. A lot of parents there, particularly up in the Punjab part of India, want to send their kids to New Zealand to learn to speak English naturally, albeit with a slightly funny accent. Sorry. Sweet as. Okay, don't worry. All right, so... understanding these sorts of things, in Brisbane, you don't have as many people who want to live close to the city. Why? Because the climate is so good. Would you agree that people in Queensland have a more outdoor lifestyle than, say, people in Victoria? Think about the capital cities. People live in Brisbane, they want to go boating, they want to go to the beach, they want to do swimming and fishing and many of these other sorts of things. In Melbourne, it's actually considerably colder.
Can you explain Darwin?
Yeah, I will in a second, right? What happens in Melbourne is Melbourne's considered the food capital of Australia, the fashion capital of Australia. There's theatres, there's shopping. Many of the activities that people do in Melbourne are a much more indoor activity. Who understands that? So this is why whenever you go to a city, you have to understand, well, how does the climate play a part in this, and what sort of the activities that people want to do? Now, Darwin grew incredibly fast for one reason. In Australia, they decided that if we ever get invaded, it's not going to be from the south. It certainly isn't going to be from the east, because they're Kiwis, right? And where do we need our military bases and our military staff? Well, we need them in the north and the west. So a lot of the battalions and the groups that were in Adelaide, they've moved up to Darwin. They moved some to Townsville. But just so that you know, who's from Perth here? Right? Some of you may be aware that they've said that we have too much of the state or too much of Australia that's unguarded in that northwest corner. They actually want to establish a permanent community in the Pilbara, like not just fly in, fly out. They want to have like Geraldton and those sorts of places into a full-blown city like a Townsville. That's what they need to do. And there's a lot of talk about that. So just so that you're aware, these are the sorts of things that are happening. So you had so many people moving up and all the support for those battalions, which meant for a small community that didn't have enough housing for all the people that suddenly arrived, the prices literally shot through the roof. Who understands that? One of the other things that happened is that you had builders and developers who moved over there, particularly from Queensland, to start building housing stock. And they built the sort of stock that you could find on the Gold Coast that you should never build in Darwin. Guess what sort of houses they built? Ones with canals, which are now croc infested. Who would have thought? Put water really close and the crocs will come. Who would have thought? So anyway, I'm not a huge fan of Darwin for that reason. And one of the reasons I'm specifically not a fan of it is because if the government decides to change their policy, and by the way, do governments change policy every now and then? Yeah, and could it have massive effects immediately? Yes. And because of that, I'm just not a huge fan of Darwin. The true value isn't supported by what's happening up there. After they get over this initial push, property prices there, I think, will settle down. Just like in Perth, property prices in 1 year grew by 40%. And then people realised that wasn't sustainable. So you had really good areas like Peppermint Grove, they actually fell. Some other parts of Perth fell. Others have just languished a bit. In fact, at one stage, there was literally plane loads of people from Perth flying over to buy housing stock on the east coast of Australia because their values had gone up so much, they borrowed their equity and they were coming over because they knew their market was at full price and they could actually buy things at a better price on the east coast. Does that make sense? Yes? All right. So this is median prices. And this is RP data at the end of July 2010. And you can see this is the problem with Sydney. Something that happened in Sydney that normally never happened in the last growth spurt was this. Apartments were the ones that started to grow first. That never happens in Sydney. Does anyone take a guess why apartments started growing first rather than houses?
As people's affordability rose, that's the first tier level to come in.
Well, that's about 90% right. It's absolutely to do with affordability, but they couldn't afford the housing stock. It was too expensive. And what they could afford were the apartments. They were the ones that actually started to rise first, which has never really happened in Sydney. Now, you can see with prices on the average of 605,000, that was in July, it's probably close to 650 now, they're actually, in many cases, quite unaffordable. Even though people in Sydney get paid nationally more than anywhere else, Sydney is the most unaffordable market in all of Australia. Who's from Sydney? You don't have to be told that twice, do you? You already know that, absolutely. All right? But if you look at this, Melbourne prices are actually much more competitive. Even though it's the second biggest city, it's much more competitive. People get paid on average second highest in Melbourne, in Australia, yet property pricing there is much, much more affordable. Now, this is from another data source. So RP data is a great source of data. Another one is APM, Australian Property Monitors. They're owned by Fairfax, who own The Age in Melbourne and the Sydney Morning Herald in Sydney. And this is the data they put together. And they measure June to June data, right? And they don't split out houses from apartments. But this is what they found. For the year ending June last year, Melbourne grew 27.9%. Perth, 9.3%. Adelaide, 11.3%. Brisbane, 7.3%. Sydney, 13%. National average of 15.6%. Now, let me ask you, is 15% a good growth rate? Well, let's compare it first. What do you earn in the bank accounts right now? 10% in a bank account? Tell me where. What do you earn in a bank account right now? 6%, 5 to 6%. All right, would you agree with that? Somewhere like 5 or 6%. You've earned 15.6%. But have you really earned 15.6%? Well, let me ask you this. That's what the national price rose, and that's really, and write this down, this is return on asset of 15.6%. But return on investment, would you agree that most people, when they buy a property, don't pay 100% cash? They usually put down about 20% deposit, sometimes even less, and they buy the rest with whose money? The bank's money. So in fact, their return's effectively 5 times that because they're only putting a fifth of the money in to get the same result. So it's 5 times. Who understands that? So in fact, what is their result? So the return on investment, the result is 5 times that is 75, 78% for the year. Is that a pretty good result? Yes or no? Yes. That's incredible. If you went to a normal financial planner and said, I'm planning to get 78% return, what would they say to you? They'd laugh and they would say it's impossible. Why would they say it's impossible? Because they can't sell direct property. They don't have a system, a mechanism for it usually, all right? Because they don't know how to make money off it. They can only do things such as shares and things like that and manage funds which are on their approved list as part of their Australian Financial Services licence. Now, for us, because we're in property, we look at so many other property drivers. Now, this is from ABC News. Obviously doesn't get as much press or as much news as the 7, 9 and 10s. And this is talking about a group called UDIA, the Urban Development Institute of Australia. The UDIA says, look, Queensland's beginning 2010 with the worst shortage in the nation. See, one of the key differences between the US and Australia is this. The US in many pockets is oversupplied. Australia is undersupplied. In some parts of the US, if you go to California, they have got 5 years worth of stock, which means if they stop building today and didn't build another house with just normal natural growth, it would take 5 years to soak up all of that growth. In Australia, we're at the complete opposite end of the spectrum. Now, if you read this and said, well, Queensland is going to start with the worst shortage, what would logic tell you to do? It would tell you to go to buy in Queensland, agreed? Yep. But remember what I said earlier on. Queensland people are much more outdoor. And where the money is where the mining areas are, is not even close to Brisbane. Does that make sense? So, in fact, it's a Queensland thing, but if you want higher growth, you need to look at the cities where you have more people with more money competing for fewer properties. And that happens more in a Sydney and a Melbourne. And particularly Melbourne, because it's coming off a low base, it attracts more people. You see, if people come in at a lower base and they can afford that, the people that are already at that low base, guess what they can afford to do? If there's more people coming in to buy at the lowest base and you were already at the lowest base because you were a first home buyer starting a new family, someone wants to buy your house and pay you a pretty penny, what would you do? You would sell it and buy at the next level up. Who understands that? So if new people are coming in to buy your starter house that you start with, you could be an upgrader. Who thinks that makes sense? And see, where you've got cities where new people can't even afford to get in, the chain doesn't keep moving up. But Melbourne has got a low enough price point for people to keep moving in that allows people to keep moving up. Who understands that? That's a very important thing. Houses priced to grow. Look, this is from last year, but it talks about a company called U.S Shrapnel, and they're another great source of great data. And I put that in there because I wanted to compare it to the end results for 2010. U.S Shrapnel are one of the most widely accepted and talked about economists groups in Australia. They actually said, they predicted that Melbourne was going to grow at double the rate of Sydney. Now, why do you think any city would grow double the rate of its equivalent city? Because Melbourne and Sydney have got almost equivalent population sizes. Melbourne's rapidly catching up on Sydney, right? People in Sydney get paid a little bit more, but their property prices are much higher and cost of living is much higher in Sydney. Why do you think people are moving to Melbourne? It's cheaper and more affordable for them. They're the main reasons. And this is not just people from overseas. This is people from around Australia and also from rural and country areas moving to the major cities. One of the problems that we have is, this is from the Commonwealth Treasury Department, so federal government. They say that we need about 200,000 houses a year just to keep up with normal growth. We're only building 160,000 houses a year. Who can see the problem with that? Pretty obvious problem there. This is what the data sort of looks like. This is demolitions down the bottom, net population growth above that, net migration on top of that, changes in person per household, and completions. Well, let me tell you, completions are actually dropping like a stone. Anybody know why the completions are dropping like a stone? They can't get finance. So, because if you're a developer, if you wanted to build something, you would need to get approvals, right? You're getting approvals to build houses to sell to people. But to build the houses or the apartments, you need money from a bank. About 40% of all the money that our banks used to come off what's called the securitization market here in the US, which is what they would do is they'd take lots of home loans in Australia, they'd bundle them up, right? They'd move them over here. On the securitization market, they would sell them. Who would buy them? Countries, big managed funds, lots of different people. They would pay for the amount plus a premium on top to get the cash flow for the next 25 years or 30 years for the home loans as they're slowly being repaid, right? Who understands that, right? Now, that market is largely dried up and our banks are competing with countries like Portugal and Spain and Greece, right, with sovereign guarantees. So it's much harder to get that money. So our banks in Australia are actually cash starved. And so they're only going to lend to what they feel is the safest investments. And to them, the safest investments are lending to individuals buying individual properties. Because if one of them goes wrong, guess what they'll do? They'll take that property back, and in the meantime, the property's already gone up in value, so they're not going to lose. And they also know, because of personal guarantees in Australia, they'll definitely get all their money back. Who follows that? So that's a no-lose situation for them, and that's exactly what they're doing. ANZ currently estimates that we're 250,000 houses short in Australia. 250,000. Now, for us, that's a huge number. But this is what it looks like visually. Up until about 97, we were in surplus. So below the zero line is surplus. What is it? Surplus. So we have too many. Above the zero line is shortage. What is it? Shortage. The year was about 97 that we went from surplus into shortage. So based on that, can anyone see there's a trend here? Even if you're not a chartist or anything like that, is there a definite trend? Yes or no? Which way is it going? Up. Is it going at a linear rate or is it going up exponentially? It's exponentially. Now, there's no crystal balls in the world of property. I don't know what tomorrow's going to bring, but because I do so much research, I have a better than average educated guess. Who follows that? Right? So if I know that it takes time and money to build housing stock and we don't have enough, and I know that there are people that need to live in properties, is that going to influence my thinking? Yes or no? Yeah. All right? Now, according to the Housing Institute of Australia, which is another great economic body in Australia, so you want to write that one down as well. So you've got RP Data, BIS Shrapnel, APM, HIA. One of the great things about Australia, and this is why it ranks so highly in the world, is it's such a transparent market. You can independently go and check the data yourself from all of these sources to verify what's going on in the Australian market. Some of the markets I've taught in places like China and India, you just can't get any stats. So how do you form an informed opinion? And the government can artificially influence something if they need to, and they will, whereas in Australia, it doesn't happen anywhere near to that extent. This is why Australia is considered, according to the Jones Lang LaSalle Global Transparency Index on Property, every 2 years they bring it out, Australia ranks number one because we are such a transparent market. That draws other investors in as well. According to HIA, by the end of this decade, 9 years from now, we will be 500,000 houses short. You must understand that this is a problem that cannot be fixed. Well, tell me, what do you think the implication of that is? A problem that cannot be fixed. Tell me this, do people need to live somewhere, yes or no? Write this down. People need to live somewhere. That transcends education, that transcends history, that transcends religion, that transcends how much you earn. Everyone knows, even from prehistoric man or woman, we have to live somewhere. Whether it's a cave, a straw hat, a tent or a straw hut, doesn't matter. But we all know that. And see, here's one of the interesting things about property. It is not just a need, it's a want. And that's what makes it incredibly unique, being both of those. It's a need and a want. So we need to live in a house, but what do we want? we want a McMansion. And that's one of the reasons property prices are driven up so fast, because that's what we want. Do we need to have a holiday house? No, but we want to have a holiday house, correct? All right. Okay, so there's two major white elephants going on in Australia right now, all right? As I said, there's over 30 drivers that I look at, but I'm just going to focus on two. First one is this one, population growth. This is from BIS Shrapnel, and the population growth was 215,000 people net in 2008 coming into the country. In 2009, it was 285,000. 2010, 300,000. Now, does anyone know what the long-term inflow of population is into Australia? Long-term trend number. It's 140 to 160,000. That's what it's been long-term. We've actually had one of the biggest growth spurts in terms of population growth, in terms of people coming in here since World War II into Australia. I know we're not in Australia now. We're in Kansas. No, we're not in Kansas. But I want you to understand that all those people coming have to live somewhere. Also, if you check Australian Bureau of Statistics, what you'll find is that ever since about the 60s, the number of people on the land has steadily been declining. Guess where they're all moving? In Australia, they're moving off the country rural areas. Where are they moving to? The major cities. Why? Because of opportunities. We have higher levels of mechanisation than any other time. We've got more equipment like the John Deere stuff that does the work of 10 people. There's also not as many opportunities in country rural areas if people want to expand their horizons. Does that make sense? That's why they're moving to places where they can get education. And that's why places like here are attracting so many people, because there are so many courses that are available that people can get trained on. That's why I like places that have got an education element. Why? Because it draws people of a certain demographic. Who understands that? And when you get highly qualified people of that demographic, it draws bigger businesses who want to hire them. And that's exactly the story that's happening here. Make sense? Okay, so if this is all that was going on, if we had roughly twice the number of people coming to Australia, what would that do for housing? Would you have more people competing for the same number of properties, yes or no? Yes. All right, what would that do to the price of properties? Drive it up. But however, these immigrants are different to when I first came to Australia. When I came to Australia, we had nothing. We came with just a couple of suitcases and the rags on our back. That was it. We lived in a house with another 4 families for a while because that's all we could do, right? The migrants that are coming nowadays are often employer-sponsored. They speak English, they actually have qualifications, and they're often employer-sponsored as expats. Does anyone know the significance of that? Let me tell you, they earn a lot of money, and often their businesses pay for a whole lot of stuff for them. Right? They often pay their mortgages, repayments, or their rent, and they need to live and work close to head office. Where do you think their head offices are? Major cities. So I want you to understand, if you have cashed up people, and some of the cash is from their businesses they work for, paying for their rents or their mortgages, and they're earning more anyway, what does that mean for their buying power, do you think? Much, much higher. And this is part of the equation you need to understand that's happening in places like Sydney and Melbourne. All right, now this is some of the key growth factors. I like to point this out because, you know, Australia, we're only 21 odd million people, but they expect us to grow, this is according to RP data on ABS, they expect us to grow by 2056 to about 35 million. I don't know if you're aware, but Treasury revised these numbers. They revised these numbers and said, no, we'll hit the 36 million mark by 2050. But then one of the academics read the report they put out and their methodology, and they said, no, we'll hit 36 million if we return to this level of migration. But if we don't, if we stay at this level, and by the way, business is lobbying both sides of government right now tremendously to allow more skilled migration in. Do you know why? Because we're at 5%, we're actually just a little bit below 5%, which by Western society is considered full employment. Western industrial societies are 5%, that's full employment. We're actually a little bit below 5%. A lot of the big projects that we need to keep the country moving need skilled employees. We don't have enough of them. So both sides of government are being lobbied very strongly to allow more skilled migration in, right? Otherwise, we're going to have a wages explosion that'll fuel inflation, and that means interest rates are going to go higher, and that's going to be a whole lot of different problems. Who follows? All right? So we will probably not stay at this. We'll be closer to this. If we do that, we get to 42 million people by 2050. So in 40 years, hang on, in 40 years, we'll have doubled our population. It took over 200 years to get to 21 million. We'll hit 40 million in 40 years after that. Who believes that that is going to cause some pressure and stress on housing pricing? Anyone believe that? I believe it'll cause massive stress. And which way will it cause the stress? Up or down, do you think? Up, massively, all right? And that's part of what you need to consider. Actually, I'll just show you this one. This one, look at Melbourne and Sydney. They expect Melbourne to grow much faster than Sydney. At this point, Melbourne is considered to have much higher growth than Sydney for a whole lot of reasons. Melbourne's considered to be the sporting capital of Australia, the arts capital, the food capital, the drink, well, not the the type of drinking that they do there, not the Darwin stubby type drinking, but it's also considered in so many other ways to be a much more cosmopolitan city than Sydney. Sydney's a beautiful city. I grew up in Sydney. I love Sydney, but Melbourne actually has better transport infrastructure and cost of living. There's so many other advantages. Melbourne also draws from people from Tassie and South Australia as well. New South Wales doesn't as much. At the moment, there is 1,800 people per week moving into Melbourne. They all need to live somewhere, yes or no? Yes. Right? And that's significant. Why? Because the cost of living there and the cost of housing is so much lower. And I'll give you an example of that. If I wanted to buy a house, would you agree it needs to sit on some land? Agreed? All right, if I wanted to buy a standard sized block of land in Australia, which is 450 square metres or thereabouts, right, which is 4,500 square feet or thereabouts, okay? If I went to a Sydney and I was looking at maybe 25 to 30 kilometres out in Sydney, what would a block of land, who's from Sydney again? What would a block of land in Sydney, 25 k's out, cost me? 25 to 30, if I could find one. If I could find one.
400K?
Yeah, at least 400. I would say probably 450, maybe probably more. And I'll tell you where my parents live, or my dad lives, it's at Carlingford, blocks, and it's a hills district. Blocks of land there start at 750K. They're a little bit bigger, probably 600 square metres, but you need it for a reason. Anyone know why? It's called the Hills District. Anyone take a wild guess why it's called the Hills District? It's very, very hilly. When you have a lot of hills, you have a lot of rock. So your site costs to get rid of the rock to be able to build something are much higher than level even sort of areas. So for your block of land in Sydney, you would probably add at least 50, but in some cases up to $100,000 extra in terms of site costs. Who understands that? Sydney is also a geological basin. It has got a lot of clay in it, right? So it actually has a lot of movement. When the big drought was on in Sydney, they were actually saying the Architects Association, the Royal Institute of Architects in Australia, were actually saying to people in Sydney, forget about watering your gardens, water your foundations. Otherwise your house will crack, right? Particularly the old houses. So in Sydney, you've got to have much stronger slabs. So your site costs are way, way higher than many other places. In Melbourne, if you were the same distance, and they're about the same size cities, thereabouts, in Melbourne, you could get a block of land that distance for $200,000. Now, who thinks that's a significant difference? Right? And your site cost will be a fraction of that in Sydney. In fact, you could have a 3-bedroom, 1-car house in Melbourne for about $349,000. In Sydney, you're not even entered the market yet with a block of land. Now, there's a guy called Bernard Salt. What's his name? Bernard Salt. He's Australia's leading social demographer. He has an article every week in The Australian in the property section, and I think in the Courier Mail once a week as well. And he was the guy who came up with the concept of tree change and sea change. So you know all the baby boomers that are retiring? He's the guy who actually came up with that concept. So he's the most widely written about and quoted social demographer. He talks about trends, governments and everyone else listens to what he's about to predict. He has predicted that the north, the west, and therefore the northwest as well of Melbourne will become unrecognisable over the next 20, 30, 50 years. Why? Because it's empty and it's flat. And it's a very good loamy type soil, so you don't have any problems with slabs. So based on that, those areas will expand tremendously. And because Melbourne's actually got better infrastructure to handle it, what you're going to find is whole new suburbs, whole new cities will be created. Now, who's from Queensland here again? All right. And has anyone here ever driven between Brisbane and the Gold Coast, sort of 10, 15 years ago? All right. When I was really young, I did the drive between the Gold Coast and Brisbane. I think it was probably 20 years ago. I was really young. Guess what? Guess what was between the Gold Coast and Brisbane 20 years ago? Nothing. Virtually nothing. And that's what I want you to think about. On the coast, virtually nothing. The biggest city in in Victoria is Melbourne. Second biggest city is Geelong. It's along the coast. Do you know what's in between? Avalon. Do you know Avalon is being groomed as being the second airport? They're already moving it towards being international, and they can get a line out there. In fact, there's a train line already goes to Geelong. They just need to build a $1 million spur link, and it's done. They will probably never get, even the Ballarat government wants to, they'll probably never get a train line out to Tullamarine. It is just too hard and politically difficult. But they'll get one to Avalon. They've already got massive expansion happening west, and it's on the coast. It is like between a Gold Coast and a Brisbane. So that's why Bernard Salt has said the north and the west. I don't think the north as much, I definitely think the west. Also in the west, they're building, a $500 million marina called Wyndham Harbour. Now, if you've ever been, who's been to Sydney, into Rushcutters Bay or anything like that? It will dwarf those marinas. It'll be 1,000 wet berths, 300 to 400 dry berths, which is racked and stacked, and about 18 super yacht spots as well. Super yachts are in Sydney at Blackwattle Bay. They have the super yacht marina. The Grundy family and Greg Norman, they're like mini ocean liners. That's what they'll have space for. People with boats like that, and generally in boats, they generally have money. They're built in cafes, bars, and restaurants. They're relocating into that area, the Sea Patrol rescue people as well. So it's going to be huge. They're also going to have ferry terminals there that will get people directly into the city, bypassing the Princess Highway, getting out there. And the Westgate Bridge. It's going to be an incredible lifestyle area. So this is why my prediction is the West will actually start to boom compared to, say, the North. So that's going to just keep attracting more and more people. So my belief is that because of the diverse economic fundamentals and the price entry point of a Melbourne, they'll go to Melbourne rather than a Sydney. And the stats are already starting to show that. And from federal level, they already recognise this as well. So people will be attracted much more to Melbourne. Okay. That's actually where I live, Point Cook, just over there. So I believe this whole West will actually, over the next 10, 20 years, 30 years, will actually just keep expanding. You can see round here, there's kind of an edge. It's called the urban growth boundary. Every city has it in Australia. Here's the problem, just so that you understand. At the edges is where the governments actually rezone land to turn it into residential, from farming or bush or sovereign land. Does that make sense? That's where all the green dots are. All the green dots, that's the urban growth boundary. Close to the middle, where the red dots are, that's the most expensive land. And usually what happens is developers will come in, they'll buy a couple of houses, maybe often just one, but often maybe two or three. They'll consolidate the blocks, they'll knock them down, they'll build townhouses or apartments. Does that make sense? But we've got an unusual situation in Australia that hasn't happened before. That on the outside here, where governments wanted further expansion, they've changed their minds and their policy. They're now moving towards a policy of higher density because governments have less money, because people are getting sick of paying taxes and they can't afford to pay more taxes. Just so that you know, in Australia, according to other OECD countries, we have one of the highest EMRs. Anyone know what an EMR is? Effective marginal rates. They've worked out that if you add together direct taxes and indirect taxes and all of the inflation, we are losing between 70 and 80% of all the money we earn in a week goes in some shape, way or form to someone else, like a government or something like that. We don't make much money. Who noticed with glee the tax rates here in the US were substantially lower and the brackets were much broader than that in Australia? Anyone notice that? Their top rate was a fraction of what ours is, and you have to be earning like over $1 million to even get close to it, right? We get taxed heavily in Australia, right? But governments still don't have enough money, so creating new areas outside of this boundary is ultra expensive. Why? Because they have to put together schools, hospitals, railway stations, all of these sorts of amenity. It's too expensive. So they want higher density. So they want people to move closer in. How do they do that? They slow down or make very expensive growth outside of that, okay? Now that's all good and well. That's what one hand's doing. But on the other hand, developers that are closer to the city, they can't get funding. So they can't build. So you've got a double whammy. that it's driving up prices. You're not getting as much new stock on the peripheries coming in, and you've got not as much stock on the inside coming in either. And that's part of the problem. That's why we've had such a slowdown in the amount of properties that are being approved and then completed. Who understands that? Now, it hasn't really hit the press yet. People are starting to talk about it, but it will sooner or later. One of the reasons it hasn't hit the market so much is because interest rates are relatively high as people perceive them. They're not. Who remembers interest rates of over 20%? Okay, so paying 7.5% to 8%, is that expensive or cheap? It feels cheap. All right, but often younger people who are expected to go back to 3 or 4 or 5%, they go, oh, I'll wait till they come back down a bit. And they might come back a little bit, but it'll be a while because our economy is so strong that the government has very what are called blunt instruments to slow down the economy, right? In the past, when I was growing up, if they needed more money, they just put ciggies and alcohol up. Right? That's all they do. It was very selective, but they got rid of a lot of those things and brought in a GST. So they've got very blunt hammers to try to slow down the economy. The only way they can do that is by keeping interest rates high. Everyone follow? And for some people, that's a good thing. If you're a retiree with no debt, it's a great thing. But for the majority, it's not. All right. Melbourne house prices, they've been soaring. Some properties have been growing up to $766 a day. Imagine that. Imagine that's more than a person earns in a week. That's what some houses are actually growing by. Who'd like to be a millionaire automatically? Anyone? Yep. Right? Well, according to BIA Shrapnel's data, they analysed the last 43 years worth of data and they trended it forward. And they worked out if you buy an average house in Melbourne, it will grow to be over $1 million in the next 12 years. Right? So in the next 12 years, you'll be a millionaire automatically. Now, that's pretty good. Just buy an average house in Melbourne, no problem. But what I'd like you to look at is this. This is the growth curve. And would you agree down the bottom here, the angle down the bottom is different to the angle up here. Can everyone see that? That the angle is very, very different. Here it's fairly shallow down the bottom, but it's much steeper up here. It's fairly shallow down here, but it's much steeper up here. Can everybody see that? Say yes? Yes. What is the year that it changes, roughly? What year does it change? It changes around here. Would you say it changes roughly about there? Which is around 96, 97. Who remembers what I said happened around 97? Anyone remember? We went from, say it again, please?
Went from surplus to shortage.
We went from surplus to shortage. Now think about this. In any normal, what's called Western Keynesian economy, which is prices determined by supply and demand, if there's too much supply and not enough demand, what happens to the price? No. Goes down. If there's too much demand and not enough supply, what happens to the price? Goes up, yeah. So if it goes up, it's been going up. Now, that's Melbourne, but let me show you the rest of Australia. This is what's been happening in Australia, and this is data from Australian Bureau of Statistics and Real Estate Institute of Australia. Okay, so Sydney, Melbourne, Brisbane, Perth, Adelaide. Now, I don't know if you can see the bar charts, but this represents about a decade each. The last one represents, I think it's 12 years or 11 years. But which decade, starting which year, had more growth than all the other decades before it? In fact, had so much growth that if you added together all the other decades, it was still more. The year after 96, so 97 to 2008. Would you agree with that? Yes? Yes. So all around Australia, properties started really, really moving. Why do you think they really started to move in price? Started to move. We went from surplus to shortage. Agreed? Have we fixed the things that caused that? Yes or no? No. Or have they gotten worse? They've gotten much worse, haven't they? And I want you to understand that. And that's why there's such an incredible opportunity in Australia. This is from some international journals. They've said Melbourne, Australia's property market will be the top performer in the world. Why? Because if Australia is one of the best performing markets in the world, and Melbourne was the top performing market in Australia, Melbourne, ergo, would be one of the best performing markets in the entire world. And what's incredible is that many of you have very easy and direct access to it. Now, some of you would say, well, hang on, the US is really good, and it is. But in the US, you are unlikely to get as much gearing as easily as you would in the Australian market. Does that make sense? All right? And also, some of you may feel more comfortable with parts of the Australian market because you're there, you understand the laws, all these sorts of things. It's not one or the other. In my world, you need to look at all the options and work out what's best for you, and often it's a combination of many of them. Who understands that? Okay? All right. I won't talk about that. Now, this is from UDIA stats as well, Urban Development Institute of Australia. And what I'd like you to just focus on is this. Would you agree in every major capital city in Australia, there's the best suburbs in any city? And the majority of people living in that city can't afford the best part of that. So if you lived in Sydney, it's tough to be able to buy in Elizabeth Bay or Bondi. Would you agree? And in Melbourne, you know, Toorak and those sorts of places. And in maybe Perth, it's Peppermint Grove, and maybe it's Hamilton in Brisbane, as an example. Would you agree with that? That not everyone can afford to live there. So what it's saying here that in a part of Melbourne, it's a considered affordability crisis for the average person living there. If you go out from there to the middle of Melbourne, it's serious constraints. If you go to outer Melbourne, it's considered affordable. And that's where many people start. They start at affordable, and as their equity goes up, they upgrade to middle, and then they potentially upgrade to the higher areas. Who understands that, right? Now, what they did was they worked out that the equivalent affordability for outer Melbourne is the same as places like Mildura, Shepparton, Wodonga, Ballarat, Bendigo, Geelong and Latrobe Valley. Now, do you know that some people choose not to live in the most expensive part, or they've got the money from that and they go, you know what, I can cash out because I want to travel the world, I want to leave some money for my finances for if I get sick, but my kids have left home, I'm an empty nester, I don't need such a big house with so much maintenance. I'd rather something newer and easier. Who follows that, right? A lot of baby boomers are in that position. But I'd like you to note down that according to UDIA, they believe that Shepparton is considered equivalent in terms of affordability as outer Melbourne. I'd like you to write that down and make a note of it, please. That Shepparton is considered affordable, according to UDIA, the same as outer Melbourne. So, in summary, rapidly rising construction costs are actually underwriting property values in Australia. There's a massive shortage of properties being built, and new land being released is creating this growing deficit in the Australian real estate market. We have a massive population growth, which is giving us huge demand. Strong economy creating cashed up or high equity buyers, and low interest rates are creating pent up demand. And that's important to know. Interest rates are high, it's keeping some of the people which would have been in the market if it was lower, who would have overpaid, it's keeping them at bay. That demand does not disappear. They're still there, they still want to get in, they're just waiting for the opportunity, or until they believe that they can't wait any longer, or until they get used to those interest rates, right? We've also got a massive rental crisis, and this is why in Australia they've started implementing a middle tier to the rental market, okay, which is the NRAS. Some of you may be aware of NRAS, okay? So that's kind of what's going on in the Australian market. When we come back, we're just going to take a 5-minute break. I'm going to be talking about land, right? I'm going to talk about why land in Australia, all right? So, guys, just 5 minutes. Is that all right? Just 5 minutes. Stretch your legs, go to the toilet, do whatever you need. 5 minutes, okay? Now the question becomes, who believes that, just from what I've said so far, the Australian market's got serious legs to it? Who believes that? Okay? So then the question becomes, well, how do you enter it the most cost-effective, systemised way to take maximum advantage of it? Would you agree that's really the question you should be asking yourself? Okay? So part of the equation for any property in Australia is land. So how do we look at land? Well, first of all, tell me what the biggest problem is with land. Well, no. As an investor, what's the biggest problem in terms of land? There's no... Okay, hang on. Someone said no return. Is there still a return but there's no cash flow. And I want you to get clear on that because honestly, some people mix that up. They think, I've got no cash flow, therefore I've got no return. So they start forgetting about it. They automatically discount land. So think about that there is absolutely a return, but it's just not being a cash flow return. Make sense? Okay? And by the way, if you haven't switched your mobile phones to silent or vibrate, could you please just do that now for the benefit of those around you? All right, so what I'm going to talk about in terms of land specifically, because land is a subset of residential property. And there's only very few people in Australia who really know how to do this the right way. Everyone else does it the normal way. And let me tell you, the normal way is not the best way. It costs you too much cash flow and it causes you far too much stress. So I'm going to talk about some of the things that make it grow, but I'm going to talk about the natural reasons and the man-made reasons. And I want you to think about this for a moment. Who would like at least one way to virtually have guaranteed capital growth? Who'd love to do that? Okay. What about two different ways to virtually ensure guaranteed capital growth? Who'd be interested in that? All right, not every hand. So you all want 3 or more ways. Is that right? All right. Well, I'm going to show you that because often this stuff I'm teaching you, only land developers actually know. Most other people have never even heard of this sort of stuff. So I'm going to go through it relatively quickly so you understand the basics of it. So, in terms of land grows for 3 natural reasons. So what type of reasons are these? These are the natural reasons that land actually grows. Number 1, it grows because it's scarcity. Right? Number 2, it grows because of its ability, and this happens a lot in particularly Sydney and Melbourne and Queensland, in some of the bigger areas, its ability in older suburbs for blocks of land to be subdivided, right? And number 3 is an interesting one because it's a very strong emotional reason. It's the blank canvas effect. Oops. So put your hand up here if you've ever built a house from scratch, all right? So were you able to design the floor plan, the outside, the finishes, all of those things, yes or no? So you were building your home. You weren't buying someone else's house. Who understands the difference? Do people pay a premium for that? Yeah. You know, some people even camp out for days at a time just to secure the right block of land. Does that make sense? All right. So they're the natural reasons. And because of that, you're going to find property values or the land component rising faster than houses. And let me explain to you this. What grows fastest in the residential, all the subcategories, is land. It actually grows much faster, followed by land-rich houses. So detached brick veneer houses or bungalows sitting on large blocks of land, followed by townhouses, which are higher density, have less land component, followed by low set, which is 3-story high apartments, followed by high set or over 10, 20 floor apartment blocks. And by the way, when you get to some of those, the amount of land that you're paying for as the overall price may only be as big as literally a beer coaster, right? That's all the land is in one of those. But some of you would say, but hang on, I know some properties in Bondi that, right on the water there, they grow fast. Yes, they do. But imagine the land they sit on. That grows unbelievably fast. Put your hand up if you follow. Okay? All right. So they're the natural reasons. Now let me go through the man-made reasons, because you said you wanted to understand ways to actually have man-made growth or ways to virtually guarantee 1 or 2 or 3 different ways to guarantee growth. So this is what actually happens. Big land developers will actually take out a big block of land. And you can actually see that right here in Phoenix as well. It's exactly the same process. It happens the same way everywhere. Someone with a bit of vision decides, I know what we can build here. We could build a city or a suburb or something like this. And they grab an area which could be a farmland, it could be bush, it could be jungle. In some parts of the world, it could be just sand. Right? If you go to Dubai, a lot of the stuff's just built on sand. All right? So what they do is the first stage of this is called, number 1, land banking. What's it called, guys? Land banking, right? And then they'll sit on this. How long will they land bank it for? Could be not just years, could be decades. If on the last couple of trips, I spoke to Mayor Phil Gordon, and I also spoke with one of the heads of infrastructure here, Don, and they said, look, they have a lot of the land that you would have seen around, particularly close to the CBD, it is owned by the city, not a private developer. And they're very, very careful who they sell it to and for what purposes, because they want to control this really tightly, because they want multiple returns. They want to make sure that it's going to something that will fill a need that they need at the time and into the future as well. So they'll land bank it. Number two, they'll do what's called a staged development. What's it called? And this will be, they'll break it up into stage 1, stage 2, stage 3, stage 4, stage 5, 6, 7, 8, and 9. Okay? Who here has seen staged development sometime anywhere? Yep. Right? Happens everywhere, all the time. Why don't they just sell everything in one hit? Why don't you sell it all at stage 1? You can't maximise profit. Too much supply, not enough what? Demand. What will that do to prices? Drop them down. Doesn't drive them up fast enough or long enough. So what they do is they sell a small number, which is in stage 1. They do a lot of marketing. And then they can actually say, hey, great, stage 1 sold out. Don't miss out. And the people who did miss out, who were indecisive, go, oh my God, I don't want to miss out again. So they get into stage 2. But what do you think has happened to the price of stage 2? It's gone up. How much has it gone up by?
10, 20,000.
Well, as a percentage, how much do you think it's gone up by? It might be 10 or 20 grand, but how much has it gone up by? Could it be 5%? Could be 10%, right? But because it's only a smaller dollar figure, it's easier for people to say, I don't care, because why? The block of land is so important to get the right house on it. I have to start with that. If I have to invest a bit more money, they don't look at it so much as a cost, they look at it as an investment, because they can build a better house on there in a better location, and will they recoup that in the future, yes or no?
Yes.
Yeah, most likely. And because they think they're going to live there with their families forever, it's probably going to be the next sort of 10 or years, maybe even 20, they split that extra cost over those 20 years. They amortise that. It could be a few $1,000s a year. If that, they don't care. Who follows? Yep. All right? So it's a stage development. But then here's the interesting thing that happened, and this is called price control. What's it called? Price control. And what they'll do is for every stage, they'll keep bumping the price up. So if stage 1 was 100,000, stage 2 could easily be 120,000, stage 3, 145,000. Does that make sense? Yeah. So they're walking the price up. They're putting it up by, maybe 10%, maybe even 20% for each stage. Now, how long do you think it is between stages? As long as it takes to sell that stage, but in fact, on average, it works out to be a couple of months. In fact, some of the developers I've spoken to in Melbourne, for them, it's often about a month to every 2 months when they release the next stage. One of my mates who actually sits in one of these display villages and sells houses. So people go to the land developer, they buy their block of land, then they walk through all the display villages, and some people will pick the housing group that he's with and say, I want this one particular house that you've got, right? And these extras. And then he signs them up and that's fine, they get it built. Does that make sense? That's what he does. He said that in one of the very popular ones out west, he said they were turning over a stage per weekend. Now let me ask you, if your stage sells out in a weekend, what does that tell you about your pricing? It's too low. If you sell everything in a weekend, what does it obviously tell you that you should be doing to your prices? Put them up. Who understands that? And that's what's been happening. And let me tell you, if you had bought, let's say Ian, you bought in stage 1 at $100,000, all right? And we've got James, and you've bought in stage 2. And we've got Dean, you've bought in stage 3, okay? Now, how do you feel, Ian, knowing that Dean has just paid $145 for the same size, but it's 2 streets away?
I'm ecstatic.
You're ecstatic because your price has gone up 45%, and that could have just been maybe 3 to 6 months later. Who understands that, right? So this is really important that you understand. This does not happen with houses. It only happens with land, right? So to build houses here, and by the way, in Australia, we have brick veneer houses, right? Here it was the wood frame, the gyprock, and the stucco, right? Which, when I first, what's stucco? And let me tell you, they wouldn't really build that sort of stuff in Australia, like a waterproof membrane, then chicken wire, then they fill it, and then they cover it over with textured paint. That's all they need. But in Australia, you wouldn't pay much for that, would you? but that's the most common type of construction here, and it works fine. Excuse me. So here, this is why so many people came here. So this is the interesting thing. When you go and look at properties here, more so here in Phoenix than anywhere in Australia that I've seen, you can go down a street and the houses are the same. And when I mean the same, I mean they're either one of three designs that builder does in that area, and that's about it. They're either a two-story or a single-story. They're either this size or this size. So there might be 4 in total, but they're the same. Who gets that, right? Much more than in Australia, okay? It's rare, it's possible, but it's rarer in Australia for one developer to do a land subdivision only use their building stock. They're usually smaller developments that don't have as many stages, okay? Because I've seen a few do that. Like AV Jennings have done some exactly like that, and so have Divine, okay? So this is the man-made. Can you see from this that just by putting the blocks up, every stage the price goes up? So if dollars per square metre, could you see that the dollars per square metre on every stage just continuously goes up? Who can see that? So that's virtually one way to guarantee capital growth. In a slower market or even a flat market, guess what they do? They don't put the price up, but guess what they do to the size of the blocks? They shrink them. And would you agree if the price was the same, but they kept shrinking the blocks, the block dollars per square metre would still increase? Who would agree with that? All right? But there's more than one way. There's actually several, but I'll just mention 3. A third method that actually happens, and let's say Ian and Dean were developers this time round. If Ian built, he would know that Dean's building across the road from him, but they have to use the same people who put in the roads and the curbing, the guttering, the electricity, the water. They're a group of contractors that are general purpose that are used by councils, state governments and land developers. As a developer, you don't put in the power and the water and the sewage yourself. In fact, you can't, right? There's specific people who do that. And there's not infinite numbers. There's often in an area maybe 2, maybe 3. And let me tell you, you cannot get a quote from them for the whole development in one hit, simply because their prices keep going up and you don't know the time frame it's going to take you to sell out each of your blocks. Who follows? Okay, so you know that you do one stage, and by the time Dean does his stage across the road in 3 months' time, his price will have gone up, even if Dean wants to make no more profit. But their costs have gone up. Dean, you're not going to absorb those, you're just going to pass them on, correct? Dean would pass them on knowing that if he passes them on, his price will be higher. But as soon as Ian wants to release newer blocks, his price must be higher. Who follows? So this is just that alone will keep driving blocks up and up in Australia. Now, if you check with UDIA, you'll find something that the governments do not want you to know. In New South Wales, who's heard of Landcom in New South Wales? Landcom is the sort of state-owned land developer in New South Wales. UDIA found that New South Wales has the highest input costs out of every state in Australia. To release a typical block in the outer areas worth about $400,000, there's about $130,000 to $150,000 that goes to governments at every level for fees and charges and taxes. It's just obscene. And that's one of the reasons that land is so expensive in Australia to build on, because so much of that is government charges, so much of it. But the public don't see that. They just see the developers being greedy. And this is why the UDA doesn't get a lot of press on this. And the HIA knows this as well, and they talk about it, but no one follows, no one is really that interested. But there's so much on costs. Now, Vic Urban, on the other hand, which is the Victorian sort of government developer, they are considered as one of the most efficient in all of Australia in releasing blocks of land to the market, right? So it's a very big difference between the two states, and they're next door to each other. And that's why the prices are so different for properties of similar type between Melbourne and Sydney as well. So there are at least 3 reasons why land actually grows much faster man-made. Now, if you knew that was going to happen, and you knew someone else was going to do all the heavy lifting for you, who'd like to just attach their wagon to that train and go, off you go, keep dragging me higher? Who'd like that? Because that's exactly what this opportunity is, and this is what allows it to happen, okay? So, how is land created? Well, you know it starts off with sort of an empty area like this. Could be farmland, bushland, could be deserts, could be anything like that. And then someone has a vision. So we've gotten you a great result from that. And if you want to do more blocks, it's after that. Why? Because we've done a bulk negotiation because the contracts are identical. The only thing that changes is your name and the block number. Who follows? So we've done that for the benefit of, you don't have to use them. You can pick someone else, but let me tell you, they will charge you a lot more to act on your behalf, and then to do a summary, they'll charge you for that as well, and for each document, they'll charge you. We've got a very, very special price for all of our members, okay? Now, for tax, and again, I'm only here to give you general information, but normally if you pay a fee towards property purchases, is that usually tax deductible or not? Yes or no? No, not a deposit. If you pay a fee, is it normally deductible? Yes or no? If you're a property investor, yes it is, right? So we've structured this in one of the most unique ways you've ever seen. We've actually had to go up to QCs to get opinions, but we've spent this money because we know how much benefit this could be. Now, the reason we got such a great deal, just so that you know, is nearly 11,000 blocks in this. If you bought one block, would you get much of a discount? You wouldn't even have access to the opportunity. If you bought 10, would you get a good discount? You get maybe a small discount. What if you took out 100? You'd get a good discount. But what if you took out nearly 2,000? Not only would you get a good discount, but you'd actually be able to set the terms. And terms, write this down, terms are more valuable than price. Write it down. Because if I can get better terms, I could capture maybe growth for a period of time and not pay any costs. That's worth paying for. Does that make sense? So that's what we were able to do. We use massive leverage. We use massive what? Leverage to get our Property Direct members a deal they could never get. And one of the things we did was we structured it in such a unique way that the fees that you pay up front, which is your fee, may even be, but get your own advice from your own accountant, may even be fully tax deductible for you. So I want you to see what that looks like. Let's say, for instance, you bought, and I'll do the normal just so that you understand. If you bought a normal block of land for $100,000, right? Normally, you would put down a $20,000 deposit, and then later on, you'd, and that would be exchange, right? And then later on, over time, you would settle. And you'd put down the other $80,000. Would you agree that would be a normal property transaction? You put some money down now, you wait, and then later on down the track, you pay the balance. Who understands that? Okay? Now, if we extend that out a little bit, because that's normal, if you did an option, what you would do is you'd put down 20K as your option. If you went ahead, that would roll over and form part of your deposit of 20K. Does everybody understand that? Yes. The 20K you put down initially is called a premium. You roll it over, it now forms a deposit. And then, over time, you settle and you come up with the other 80,000. How much has come out of your pocket? 100%. Still 100,000. Put your hand up if you follow. Right? Now, we've done it, same result, but we've done it differently. Guys, just to make sure you're awake, everyone stand up real quick. Real quick. Come on, quick, quick, quick. Cross your arms, real quick. Everyone stand up, cross your arms. Real quick. Come on. Quick. All right, look down, yell out which arm's on top. Right. Right. There's some right people, there's some left people. Which is the correct arm? Right. Which is the correct arm? It doesn't matter because you've achieved the same result. Agreed? Would you agree you've all got, look at your partners, everyone's got their arms crossed, correct? Quick, uncross your arms, flap your fingers around like little butterflies. Now recross them the other way, real quick. See, some of you can't even do it properly. All right? So we'll wait. Everyone got it? Now, would you agree that your arms are still crossed? Yes. But does it look different? Does it feel different? Yes. But if you did this 100 times, keep them crossed. Cool. If you did this 100 times, right, would it become your new normal? Yes or no? Yes. Okay, great. Thank you. Take a seat. Excellent. Let him out. Because what we've done is a little bit different. What we've done is we've still said you can get started with about 20K as the option premium, But that will allow you to enter into a transaction where you put $0 down and you settle at the end for $80,000. It gives you the right to enter into a transaction with $0 deposit. So, you understand that in this case here, if you put a $20,000 premium down and it forms a deposit, it's a capital payment. Capital payments, are they deductible? Yes or no? No. They form part of the capital base. You can only add them in and take care of it when you sell the property. Who understands that? I'm not giving you specific advice, am I? I'm just sharing some general things. But if you put down a $20K fee for an option that gives you the right to do something, and then your deposit is $0, that fee for some people with your own advice may be fully deductible. Who understands that? Who do you have to check with? Your accountant, right? If 20K was deductible and you're in the top tax bracket, how much have you effectively, after tax, put down? Let's say 11. Could I say 11? Let's say 12. Let's say it's effectively cost you 12 grand net for some people in this room if they get the right advice. Who understands that? I want you to write that number down. For some of you, it might cost you as little as 12 grand to do this. All right? I want you to understand that. All right. Now, this area, it's located in a Parkside Riverside master planned estate. That word is key. Parkside, Riverside and master planned. Why is that key? Is there infinite numbers of Riverside and Parksides? Yes or no? No. In fact, many of the older suburbs were not done under strict town planning principles. In some areas, they just built row after row, street after street of houses. So as soon as you've got an area that's got parks and might be close to a river, do you think because of that uniqueness and that quality of life, it would add or subtract from the value of that property? It adds to it. And will it add to it just today, or do you think it may add to it in the future? What do you think? Into the future as well. So it's 180 k's north of Melbourne, situated between Goulburn River and Seven Creeks. Full first stage of development will be at least 3,000 people over the next 15 years. It'll include major retail commercial precincts, small office, home office, family homes, apartments and resort-style accommodation. What they're also doing is they're putting as part of this, and this is why the council likes this, is I want you to write this word down, diversity. It will have small blocks, medium blocks, large blocks. It will have apartments. It will have townhouses. It'll have large houses on large blocks of land. For some of these, they will even build retirement villages into them, because there are some people that love the area. Particularly, they may have a certain ethnicity or background. They want to be around their family, their friends, their festivals, their businesses. They don't want to leave. They also may not want to be a burden to their families, and their families may not be able to look after them properly, but they want to stay in the area. There's also people in that area who, if they've got a big old rambling house, rather than renovating it, say, we don't need such a big house. The kids are gone. Let's get a newer house, but still be within the area. Who follows that? Okay? Just so that you know, they're trying to make this part of the design guidelines is they're trying to bring it to a very high level in terms of being eco-friendly and also friendly for older people or people with maybe disabilities or something like that. So front door, straight in, no step. Bathroom, no ledges or steps. There's a whole lot of things. Low allergy materials. There's many things that they are including into the design guidelines that will make this a good proposition for a whole range of people. Who understands that? Right? As soon as you know a development has tight and good design principles, you know the quality will be good and the people it will attract will be good, and that will drive future growth. In fact, Shepparton has a greater retail dollar spend than Ballarat and Bendigo. I didn't know this until I started doing the research, because it goes Melbourne, Geelong, Bendigo, Ballarat, Shepparton. But one of the articles I've got shows that the GDP of people in Shepparton is nearly 20% higher than the state average for all regional cities. So people in Shepparton have more money than Bendigo or Ballarat. In fact, they have so much money, it's Bendigo and Ballarat spending power combined, which I was amazed at. And that's one of the reasons they're actually a wealthy region of Australia. And they actually per head of population have more Mercs and BMs than anywhere else in Australia. It's 180 Ks, I think it's 187 Ks GPO to GPO. It's an hour and a half to 2 hours drive. 150,000 people in the region. Population of Shep is 60, expanding over 81,000 by 2030. Fourth largest regional city after Geelong, Bendigo and Ballarat. Now, this is the thing that the councillor mentioned, and this is the thing that I grew up eating SPC Ardmona stuff, Goulburn Valley, fruit and vegetable in the cans. Who else has grown up eating that stuff? Didn't know where it came from, it was just a brand label to me, but it's considered the fruit bowl of Australia. It's a $4 billion per annum turnover industry. 45% of all the stone fruit, 16% of all the apples. It's actually 90% of all the pears, 90% of the kiwi fruit, 90% of all the tomato processing for Australia goes through there, 90% of all the deciduous canned food production. This one blew me away. A quarter of all of Australia's milk production. A quarter, right? And I actually had a farmer come up to me, a Victorian farmer, when I was doing this, he and his brother. Actually, no, they came up to me here because they were on the last trip. And they told me a bit about the dairy industry in Victoria. And he said, New South Wales and Queensland relies heavily on fresh milk. He said the majority of Victorian milk is powdered for offshore distribution. And I said, oh, that's interesting, because you don't understand why it's really important. He said, at the moment, Woolies and Coles are having a price war, and they're leading it with milk. Who understands that? And that is forcing the farm gate price to drop because they're forcing it down, which means that a lot of the dairy farms in New South Wales and Victoria are finding it very difficult to compete and make a profit. But these guys, because they're sending it all offshore, so much of their produce, they're maintaining relatively healthier margins, and they have much longer term contracts in place. Who understands that? So it's a really good thing for Victorian farmers. It's also to distribute all this produce, right? This fresh produce. It's one of the biggest, largest trucking and transport hubs in Australia. It's the largest regional concentration of food processing industries and workforce. They've had 19 consecutive quarters of positive economic growth. It's not just one of the strongest in Victoria, it's one of the strongest in Australia. Who thinks that sounds like it's got a very strong economic base? Now, also, I want you to just ask yourself this. In recession times or in boom times, do we still need to eat fruit, vegetables and dairy? Yes or no? Yes. In fact, in recession times, we'll actually need more of these. Would you agree? And this is what really tricked it for me. There are some cities, maybe, if you've been to Dampier or Port Hedland or places like that, property prices are rising so fast. But the problem is that if the Aussie dollar goes too high, it could affect some of our exports. Does that make sense? This is regional food production for all of Australia, right? This is why this was so appealing to me from understanding it from this perspective. It's a wonderful place to live. It's got fantastic schools, communities. Every time I used to drive every weekend from Melbourne to Sydney, every weekend to visit my mum when she was alive and dad and my sister, right? I used to always stop at Fryers in Shep. It was great. And I used to love going through there. It was just a lovely feel for the place. Took photos of the cows. I love the cows there. All right. Sustainability. They are putting into design guidelines everything to make this place incredibly sustainable. These are some of the numbers I'd like you to write down. The long-term land growth rate in Shep has been about 11%. So just write it down, 10.8%. Over the same period, Melbourne has grown at 9.7%. Shep has the fourth most expensive median blocks of Victoria's major regional cities at about 100,000. And over the next 25 years, they expect 9,100 new dwellings. That's about 330 odd houses to be built. Do you remember what the councillors' updated figures were? Because those figures are all out of 2005-2006 data that the council produced themselves. Do you remember what the growth, how many more houses they need? 900, not 330, 350, they need 900. So again, is that a good thing for the local economy if they need a lot more houses? This is what the future housing trends they need. They need more of diversity of houses. They also believe they're forecast to grow at not 2.4%, but the longer term forecast is 3.1% population growth. That's over triple what Sydney's currently growing. The preferred southern expansion corridor, and one of the other things that will drive it is as a tree change destination. You understand with global warming, some of the areas around our coast are threatened. There are places in Queensland that have lost metres and metres of beach. There are some parts of, I lived at Narrabeen Beach in Sydney. It's actually the second most vulnerable place in Australia for global warming and erosion and inundation. If you go further inland with good infrastructure, you don't have these worries. Who understands this? Okay? This is their stats. That's their growth rate of houses and people. This slide really shows what their problem is. They've got nearly 90% is these single detached, often larger dwellings. 2% of people live in caravans, 4% of people live in townhouses, 4% live in apartments, right? They understand that they've got a big hole here. They need a lot more diversity amongst their housing stock, and this is why they need to actively promote and support and do whatever it takes to get that diversity to where it should be, to attract younger people and people who want starter homes to get started in the area. Okay, so what's unique about this project? Well, I told you it's sustainable. It's diverse. It's meant to attract people that are young, that start off maybe in an apartment, that move into townhouses, that move into starter homes, then move into larger homes, and then back into maybe townhouses and apartments. They're incorporating parks and recreation because the biggest thing in country Australia is sport, right? You must take advantage of that. So they've got bike paths and cycling paths and, you know, all these sort of things incorporated into the design. So Moira Park, which is stage A and B, this whole area will be called Moira Park. It'll be like having your own private oasis. They'll have gardens, they'll have parks, they'll have walking tracks around the river and all sorts of things like that. Retail areas, they'll have some of those. And by the way, where it's located, you'll have within the development smaller regional neighbourhood shops, right? So maybe a Woolies or a Coles or a Safeway and you know, a couple of other specialty shops. If you need something more than that, you'll drive about 2 to 3 minutes to Kialla West where there's already more shops. If you need more than that, you'll drive the 8 kilometres to Shep. How long does it take to drive the 8 kilometres from Kialla West to Shep? 4 or 5 minutes. Let's say you've got some traffic, let's say under 10. Yeah, definitely. Right? Because there's not that many traffic lights. So you could get to a major area in about under 10 minutes. If you need something more than that, you can drive into Melbourne or its outer suburbs. If the outer suburbs is probably an hour, into Melbourne, hour and a half. So it suits a lot of people's lifestyle. Who understands that? Okay? As part of these areas that they'll be producing, there'll be some dining and some commercial. Now, when I mean commercial, you might get a regional headquarters. You're not going to get a BHP or Rio moving there. Does that make sense? So let's just be clear. Okay? All right. Sports and recreation, as I mentioned, as part of the plan, they're going to have a lot of open space, hiking and biking trails, tennis, basketball courts, sports fields, multiple playgrounds. To me as an investor, this is probably the most important one. They're going to have very strict design guidelines for sustainability and, you know, ease of access, low allergy materials for people who suffer asthma. All of these sorts of things are designed into there. Give you an example of why that's important. Where I used to live at Williams Landing, the development I was in had very strict design guidelines. And guess who it attracted? People with some money. You just looked down the road and saw the cars there. Across the road was another development. Their design guidelines was 1 page, double-sided. Very weak design guidelines. Houses weren't built as well, they weren't as nice, they were a lower price point. And I looked at it and I said, well, hang on, your design guidelines are only enforceable for 5 years. Whereas the one I'm in, they go on forever and they're managed by the owner's corporation. I said, why is yours only for 5 years? And they said, oh, we'll have finished selling everything in 5 years, then we're out of here, we don't care. That's what they actually said, we don't care. Now, if that was a long-term investment for you, if you wanted to maximise capital growth in the long term, would you want to care, yes or no? So to me, the number one driver of long-term design guideline of growth is design guidelines because it makes sure the streetscape looks good. It means it's inviting. It means you attract people who want to look after their homes. Who follows? Right? This is very, very important. You don't get this in areas that are just don't have these design guidelines. That's why, particularly here in the US, I really like developments that have got people that are looking after that development because it attracts a different type of person you generally have less problems with. Who understands that? All right? It's a green city concept. They're going to get a lot of public relations based on that, and that will attract people from all over. And what you'll get is some of these properties will generate a pricing cocoon. Now, what does that mean? Well, in Melbourne, there's a development called Sanctuary Lakes. Sanctuary Lakes is a development that was designed by Greg Norman. He's a golfer, if you didn't know, right? Anyway, with that one, land there is often 50% to 100% more expensive than the surrounding areas. So if you've got something that's unique and special, and it attracts people of a higher income bracket, not by much, but by a little bit, it'll keep attracting people a little bit higher. And what you'll find is that people often, there's a psychological term for it, I don't remember what it is, but they want to live with people at their level or preferably better. So their kids marry up. Who understands that? There's a psychological term for it. I don't know what it is. If you can find out, let me know, please. And this is one of the reasons that you get pricing cocoons in certain areas. Now, here's the best part about it. It will give you long-term growth, up to a 12-year settlement. 12 years, minimum of 10 years. Even if the development's done and dusted, ready to go, titles issued, for our members, they cannot be asked to settle any sooner than 10 years. So even if it gets fast-tracked, then things are ready in 7 or 8 years. And the first part of this development has just been, we've just got official notification included into the first batch of when they do all their assessments. So that's a good thing, right? If you were buying a block, and now you know the word Shepparton and you know some of the drivers, you could say, well, I can get on the internet. Yeah, you can. You can buy in Shepparton right now. But if you bought a block next door to ours, guess what? Would you have to take a loan immediately? Yes. And you'd be paying interest. You'd be paying interest at least 7.5%, but interest rates probably go up, probably closer to 8% for maybe 12 years. That could be over $100,000. You add to it rates, maybe body corporate, maintenance, everything else, you're well over 100 grand. Who gets that? So to capture the growth of a block of land for, let's say, 10 to 12 years. If you bought the block for $100,000, and in 10 to 12 years, it goes to, let's say, 300,000. Now, that sounds exorbitant. How could it possibly get that high? Well, let me tell you, when my parents first moved to Carlingford and they bought their house for $42,000, they could never imagine that after, that was in 76, they couldn't imagine that in 30 years, 35 years, it's gone to 700,000. They couldn't imagine that. Do you understand? Right? Now, if you've made 200K, but then you take off 100K, you've only made 100K. Agreed? That's not as exciting, let's just say, right? Because that only is about 8 to 10% a year. If I kept my 100K, it's maybe 16 to maybe 24% a year. That sounds much better. Who would agree? Okay? Plus the overhead and the stress of having to put money out of your pocket every week or every month. That's what some people have to do. Our members will not have to do that at all. So that's like making 90 to 100,000 in extra profit. Because if it doesn't come out of your pocket and stays in your pocket, it's extra profit. Who would agree with that? Say yes? Yes. All right. So they'll also put together a marketing plan. So as it gets closer to being retail ready, and by the way, as soon as it's retail ready, the prices will be retail. As soon as it's retail ready. So there's a limited time that our members can get in on this. Okay? There'll be an agent, probably a local agent, that's appointed, and you can actually just opt for your properties to be sold by that agent, no problem, all right? There's even ways to get a free block. I just don't have time to go into that, but there's even some incredible opportunities on, actually I'll just quickly tell you, on the larger blocks. At the moment, does anyone know in Victoria what's the smallest block size you can actually physically build on? Anyone know? 160 square metres. Sounds tiny, doesn't it? But 180 is pretty common, 200 is a bit luxurious, right? But what you can get on there is a terrace house, right? Terrace townhouse, 3-bedroom, 2-storey, often 2.5 bathroom, courtyard, twin-car garage at the back with rear access. That's all you need. You need 180, 200 square metres for that. No problem at all. They do them in Melbourne all over the place, okay? In Shepparton, you can't build on anything that small at the moment. Will you ever be able to? I don't know. But is it fair enough to say that the block sizes have been shrinking for the last 10, 20 years? There used to be a minimum of a 1/4 acre. Has it gotten a lot smaller, yes or no? All right? So what you may be able to do sometime in the future is with your 450 square metre block, could you build a house on there as a duplex? There's a single roof covenant that's in the design guidelines. It's got to be one roof. But could you build 2 entrances, 2 car entrances there, 3 bedroom, 1 car garage, common wall? Could you do that? And if on your block you got 2 income streams for the rest of your life, would that be okay? Right? And if you built it the right way, at some time in the future, the planning gave permission, could you split the block down the middle? If you built it the right way, separate power meters, separate water meters, separate gas meters. Could you do that, yes or no? Right? If you split a block that is worth $300,000 that you bought for $100,000 into 2, you split it down the middle, what does the price become for each block? Is it, you've halved the physical side, do you halve the price, yes or no? No, what does the price become, roughly? Maybe 200 to 220, 230? Let's say it's 220. You've sold this one. You've got 220 in your hand. Could you pay off your original mortgage and still have 100 grand in the bank? Did you just get a free block? You normally can't afford to do that because you're paying mortgage all the way through. But under our unique system, you are controlling, not owning. You are letting time do the work with no cash flow out of your pocket. You normally can never do that, but our system allows you to do that. We've also got, there's even a way we could show you to what if you could hold a block for 25 years with no money out of your pocket? Who thinks that would be incredible, right? I've got a way of showing you that. It's to do with capitalisation of interest. If you're interested in that, you can see me at the back afterwards. For our gold members, we even did this. We actually only offered this to our Asian clients because they honestly didn't know where Shepparton was and they thought it was a bit risky. But we said, well, why don't we offer it to our members as well? And let me explain to you. The developers here are farmers. They're asset-rich, cash flow poor, right? For the size of this development, they have to give a lot of money to council for the rezoning and the redevelopment. Who understands that? It's called contributions. It's not money under the table. It's called contributions. Council must provide amenity for local areas on a specific population ratio. However many population, they have to build daycare centres, libraries and other public amenities. Does that make sense? They don't have that much money to give them in one hit. So what they did was they called in a development company who works for all the other major developers, right? They're called SMEC. What are they called? SMEC Urban, Snowy Mountains Engineering Corporation. They've worked on some of the largest projects in Australia called the Snowy Mountains Hydroelectric Scheme. They know what they're doing. They've been around since the 50s, incredibly good reputation. They were owned by federal and New South Wales Victorian governments, okay? They're going to float and become independent. They've got over 100 engineers and consultants and architects. So every developer you know has probably used them for the town planning bit. They know how to do all this stuff. So when I learnt that, I was like, wow, how'd you get them? So they're running this, but they need to be paid. The council needs to be paid. The only way these landowners can do it is because for many of them, it's a retirement scheme. For others, it's a way to buy more land further out. They can afford to wait. Other developers have offered them a lot of money up front, but SMEC have worked out this is how much you can make, but you have to wait. Now, most of these farmers were going to keep doing what, do you think? Keep farming. So they don't mind waiting 5, 10, 20 years. They actually don't mind. Who understands that, right? So they're happy to wait, but they'll make a lot more money. But what they have is a problem. They need a small bridge. And they can't get funding. The banks understand this process, happy to lend them all the money they need as soon as it's rezoned because their credit policy won't allow them to lend prior to rezoning. Even though they've done it in the past, they understand the process, but they're short of money. So we've done a deal with them and we've said, offer our members an incredible deal that you guys won't make any profit on, you'll probably lose money on, but that's only a small part of the development. The other 90% will then happen and you can make your profit. Who would swap a little bit up front to make 90% of to have the other 90% and definitely make the profit? Who understands that? That's what we've negotiated with them to achieve this. And we've even negotiated that our members that are gold even get a buyback guarantee. Because let me tell you, they are super happy to buy the blocks back because then guess what they'll do the very next day? They'll sell them at the full retail. Okay? So we've even negotiated that. It's price controlled. SMEC Urban's the developer. They'll do all the project management. For options, we've even negotiated a cooling off period, which you would normally never get. It's 3 days. So you can be doubly sure and triply sure and just double check everything to make sure it's the best deal for you. You can take out the land, sell it before settlement. You can sell the land after settlement. You can, after settlement, build a house and then sell it. You can build a house after settlement and keep it. There's no restriction. You can do whatever you want, okay? Now, one of the other things that we've done is, actually, I'll just mention it. I'll just mention it there, actually. Who knows when you buy a block of land in a development that you often have a restrictive covenant that you must build within 12 months? Who's heard that? For our members and only our members, we have had that removed. So I want you to understand this. You can get a block of land in a development where all the other retail people, the 90% of people around you, must build within 12 months. You never have to build. And if you know that developments around you are being priced up for the next 25 years, and you have no money coming out of your pocket for potentially 25 years, who thinks that would be pretty incredible? Right? So it's 10 to 12 year settlement. There's a way with all the equity you can capitalise any costs into it as well. I can show you that up the back if you're interested. All right? So this is kind of what it looks like. Example, 100,000 for the blocks in the area, 100 grand. If you could just buy it at wholesale, that you can genuinely independently measure, and you bought it at 15 or 20% below, would you be happy? Yes or no? Yes. All right? Then we believe by about 2014, the blocks will be about 135 to 150. Then by 2022, 270 to 300. You initially put down a fraction of the 100,000. You put down about 20%. Inc GST is about 22,500. That's the members. You're all members here within the first 60 days. Normally, you'd put down the whole lot. We've even negotiated with our developers there to say, a lot of our members want to take advantages. Let's spread it out so they have the best chance to take advantage of this. And then at settlement time, which is 10 to 12 years away, you'll come up with 62,500. Where will that money come from? Where will the balance come from? It will come from the bank. The bank will only be lending you between 20 to 30% LVR. How much do they normally lend on land? 70%. The bank will throw money at you because it's such a low risk for them. Does everyone understand that? Now, if you just calculate this at 8%, your 100K block of land is worth 251, you've made 151K. Add the 15K of discount, you've made 166,000. How much did you outlay? 22, after tax, maybe 12. Who would swap 12K to make 166K? Anyone in the room? This is at 8% growth, which is national average last 100 years of growth rate for all properties in Australia. Land there has been growing at what rate? What did I ask you to write down? What rate was the growth there for the last 10 years? 10.8. At 10% growth, you've made 213. Add 15, you've made 200, nearly 230,000. But add the extra 100K I've saved you, you've made 330K over 10 to 12 years. For how much outlay? Maybe 12K net. Who would swap 12K for 330K? Anyone? Yes. But you have to wait. You have to wait 10 or 12 years with no cash flow out of your pocket. Could you cope with that? Yes or no? At 12% growth, which is not unreasonable, 289, add 15 is 305, add the 100K, you've made over $400,000 and you've outlaid maybe net 12K, maybe 15K, depending on your tax bracket. Can you see why this is pretty incredible? All right, where else can you do anything like this? All right, who can benefit from this? Look, whether you're doing a buy and hold or a sell them down monthly cash flow, whether you're credit impaired, you know, all of these sorts of things, the best one is using your self-managed super fund for this. I can go into more detail later on. Here's a quick example. I'm just going to skip through this. If you took out 5, you'd put down a deposit on each of those 5. What if you then decided to sell 3 of them? The profit left over, you could pay off the other 2, build 2 houses on them, and then you'd end up with this. Each house is the block of land plus the price of the house on it, 560. You'd earn, in a rural area like that, probably a 5% yield. You're making 28K passive per property. You're making 56K passive index to grow for the rest of your life. You've got $1.12 million worth of net equity. When did I ask you to go to the bank? Not yet, never. Where else do you where else can you find a strategy apart from 21st Century Property Direct where you can build a portfolio of properties with very little money out of your pocket, no cash flow out, and you end up with a portfolio with tons of equity and cash flow for the rest of your life? Where else? And by the way, there's no headache or hassle. It's a block of dirt. There's not much that goes wrong with a block of dirt. You can't get bad tenants. It can't burn down, right? Relative to everything else, you've got to do some maintenance. But until you own it, you're not even in charge of the maintenance or the land tax. You're controlling it, not owning it. But that 10 to 12 years, nothing comes out of your pocket. Even if you've got 6 of them and just held on to them, if you want to be a millionaire, get 6 of them at just 10% growth, you'll be there. All right, I won't have time to go through the questions. If you want to have the questions answered, see me at the back. That was the deal again. How it works is this. You know that Shepparton is considered very affordable. You know land's been growing. You know Shepparton in the Goulburn Valley. Just so that you know, Goulburn Valley includes Greater Shepparton, which includes Shepparton. Okay? You know it's the 10th equal cheapest place in Australia, so it really can't go further down, and it's considered by many as great buying. The option, the $22,500 you pay for the smaller block or $28,000 for the larger block, gives you this. The option, would you swap 22.5 or 28 to save 100K? Yes or no? Yes. All right? If you can't make that decision, we can't help you. But not only that, you'll be making 15K on the way in terms of where the market is. And the removal of the covenant is priceless. We've also added extra stuff so the developer can't have a mistake or a problem. If it goes over 12 years, it reverts to a 301-year leasehold. So you build your house on it, every year you pay $1. Until the titles get issued, then you pay the balance. We've even added safety mechanisms like that because you know who's buying this? Not just you. We do it for ourselves. Jamie, Conrad, me. We want the best deal. You guys are coming along for the ride and you get the same benefit as we do. Who likes the idea of that? Okay? We've also allowed a negotiator for you to lodge a caveat. It costs like $50 to $100 to caveat the land to give you further protection. And we've negotiated the land cannot be caveated beyond the value of its rural value to give you extra protection. Retail buyers will not get that. Also, we've made it a put and call option, so if you wanted to on-sell it, you don't incur double stamp duty. So we've done a whole lot of things. Just doing that saves you another 10K if you wanted to sell it in paying extra stamp duty. Here's the pricing. The blocks of land are from 72.5 to 77, not 100 grand. But if you're a member, you get a $10,000 discount. As a member, you're all members. You're paying 62 to 67K. Similar position blocks of land. If you go on realestate.com.au, you will see other blocks of land between $90,000 to $130,000 in Shep. Do it. Go on to realestate.com. We did. So the smaller block, the 300 square metres, is 62.5 for PD members. You put down a small amount, the 11.5 first. You put the balance down within 60 days. The bigger blocks, and look at this, it's 28K versus 22.5. So for an extra, what, 5,500, you're getting 50% more land, plus the ability to do a dual cash flow strategy and potentially a subdivision strategy. But you decide which one you want. For this bigger block, it's same down, 11.5, and then 16.5 within 60 days. Okay? We have 3 levels of membership. Sorry, we do 3 things: education, access to property, and to land. The 3 levels of membership, as some of you may know, is bronze, silver, gold. All the New Zealand people here, you are effectively gold people. That just restricts how long you're a member for and how many blocks of land you can get. You all have a form that looks similar to that. If you are interested to speak to someone at Property Direct, they will call you, answer all your questions, and then help you with the next steps if it's appropriate. On the form, what you need to do is fill out your name at the top, phone number, email address, and then just write on there how many blocks you are interested in, what size. Someone will call you within the next week and just discuss it with you, and they can give you access to our 1,000 pages of due diligence and all of that sort of thing. That's all you need to do. Every one of you who haven't done this, you should do this because this works incredibly well with super as well. Find out what's possible for you to get the result with this because this works so well complementary with the US strategy. So I'll just give you a moment or two to fill that out.